Aloha, everyone. Joshua Hayes at BigWaveTrading.com. Happy Easter. Good Friday on Friday. The market is closed, so we're doing the weekend video lesson on Thursday for Monday's session. It's actually a pretty good video lesson, guys, because it's been a while since I've had a new swing trade of quality regarding quality merchandise. I haven't had any high quality swing trades where I feel comfortable putting in size per one new long position. This evening, I got one, and I'm going to share it with everybody on YouTube because I don't have enough views that I don't think it's really going to matter. And the most important thing is, if it does trigger and fill and works immediately, awesome. If it triggers and fills and doesn't move higher immediately, what will I do like I always do? I will start cutting my losses and protecting my capital so that when all the conditions in the market are right and we're in a clear uptrend with clear leading stocks leading, I can really push it. I can go from 0% long to 200% long in just a few days if I get the right signals and the right quality of stocks. And today is a small start. But for now, we have to look at the overall market. Following that powerful rally on this day, 1, 2, 3, 4, 5, this week, we've seen a lot of chop. Now, I am completely in the chop camp for the next, 30, 60, 90 days, depending on the tariff news headlines and what comes out of the executive branch. I think that we're in a big choppy trading range that I ultimately expect to break to the upside. Am I prepared and have a game plan and ready for a break to the downside? Yes. I'm going to remind everybody in my long-term portfolio, I'm going to switch to the SPY because we're going to talk about the long-term portfolio. I dipped my toe into the water here. I called it a nibble. I took a bigger nibble here. I took an even bigger bite here. And right here in my main long-term account that I raised cash in, that I still had cash left following the 2022 low, I am now all in that account. Now, here's the game plan. If we move higher, buying panic once again in the long-term portfolio pays off. If we move lower and break below this low and go to this and go lower, I have a game plan where I'm going to move money from my bank accounts into my long-term accounts, and I will once again, when the next round of panic comes, buy stocks. Just to let you guys know, in the long-term account that I took this nibble, but bigger bite, even bigger bite, all in here. The last time I went long stocks in that account, which is over at Tasty Trade, and I only have one account at Tasty Trade, and it's the long-term account, was here on August 5th. So right here is the last time I bought stocks at the open on this session here, and I'm getting back to work again. Now, I expect in the short term, swing position accounts, a lot of chop, a lot of slop, but I do expect us to break out higher based on how bearish the news flow is. Like I said at the beginning of February in the chat room, if everybody's bullish and everybody's bought stocks, who's left to buy? No one. If everyone's bearish and everybody has sold their stocks, I expect this to move higher. Now, I don't think everybody sold stocks yet, which is why I'm open-minded to another leg lower. But if we get it, I'll get to work again in the long-term portfolio. There's nothing to do in the quarterly portfolios. That's the same as always. 10 stocks, 10% of account capital each, hold for 90 days. We don't reconstitute that portfolio until May 19th. So we still have a month left. So there's really nothing ever deviates. Bull or bear market, the plan stays the same there. Now on the swing position side, I've been heavily cash, but I did have an order on the book that I'll share with everybody, VSTE, and I had it on the book because all green shoots, all green tall volume bars, clearly was consolidating, was hoping for a breakout and a move higher, and you can see what I was looking for, a breakout and a move higher. Told everybody if it gaps up, not taking it. Why? Sell off. Why? Sell off. Why? Sell off. So it has to break up and through this level. Well, after today's session, we've lost that green bop. It fell. It's still good. If it would have flipped red, and I would have had a red bar on this chart, I would cancel this trade completely. However, following today's session, since we lost that green bop, I'm going to reduce my size by half. But this order's on the books, but until today, it was and is the only order on my swing position side books. The rest of the accounts are in capital, which then gets me back to this point. If we break and make a new low, while the long-term portfolios will get to work, I will still be basically 100% cash in the swing position accounts waiting for new setups. Now, before we actually get to the new long, I want to make mention, while the market looks the way it does, while the QQQ is around its 500 EMA and the SPY is around its 500 EMA, why am I quote, quote, hopeful that we can move higher? Well, the big boy stocks that I want, the big boy stocks I'm long all of these but one in the long-term portfolio. But these are the stocks I would like to take size in if they set up on a swing basis. PLTR is up at its 50 SMA. Remember, the SPY and QQQ is down here at the 500 EMA. So here's a leader for you. I love this stock. It's one of my forever holds, actually, currently. There's 5 stocks I consider a forever hold. This is one of them. Then you have Spotify. I amazingly don't have this in my long-term portfolio. You want to know why? I'm one of those rare individuals that don't have a subscription to Spotify. I asked my wife if she did. I thought she did. She doesn't. So I don't own this in my long-term portfolio. I assume it's in the NASDAQ or the S&P 500. So by proxy, I do own it in there. But as a standalone basis, I don't own Spot. But once again, Spot's by its 50. The market's by its 500 EMA. Positive divergence there. Then there's DoorDash, leader by its 50, while the market's at its 500 EMA. These are big boy stocks, and they're all holding up. Then, of course, my favorite, Uber. It's a little bit crisscrossy with the moving averages, but there's Uber once again, up by its 50, while the market's by its 500 EMA. And then this evening, Netflix. Netflix is almost at new all-time highs after hours, while the market is down here by its 500 EMA. So I have leaders that are holding up very well in this market. If everything was falling apart, that would definitely be one thing, but that is not the case. And on top of that, do you guys remember the quantum stocks? How scammy and fake they are and how they're going to crash and go to zero? Look at IONQ. Look at QUBT. Look at QBTS. Look at QNTM. They really haven't crashed and fallen off, which tells me there is something there, and there's some speculative fervor that's still in this market. So we're not completely dead yet. And then, if you're looking for stocks that have sold off the lows, following this very powerful rally on CXAI, it's consolidated very well, and there's a lot of open body candles and hammer wicks on the lower end in this chart. Could definitely be forming out a bottom, and this is AI. So I just don't see everything as horrible as everybody is talking it is. Could it get worse? Yeah. But when everybody's finally talking about the bad news, and everybody I talk to knows about the bad news, it's kind of a little too late, I think, on the downside. But we'll see. Anything can happen. I'm very open-minded. Another stock that caught my interest, it's hitting a new high. Here's a bank stock, SRBK, hitting new highs. And then we'll end the video lesson by looking at my weekly squeeze scan names. But TATT was in here on this day. Came back into my weekly squeeze scan. My weekly squeeze scan went from, on Friday, having 0 stocks in it to, I believe, today, 11. And that's the most stocks in the weekly squeeze scan since the downtrend started. But TATT today, wow. Did I buy it? Nope. I can't, it's not even actionable to me here. It would only be actionable off the 21 EMA if it has a lower volume pullback. Nice inside hammer candles might be a methodology I need to start focusing on when they make the weekly squeeze scan. When I get an inside day, technically, is this an inside day? No, because the lower wick is lower than the previous wick. Still, there you go. So there is some positive action out there. It's not all dire, and that's going to then lead me to my new long signal. But before I get there, DHI also happens to look like it's hammering out a bottom. I can't guarantee that the home builders are bottoming, but at least DHI has a look that it's trying. Now, the one new long that I have this evening has a 99 composite rating, a 99 earnings per share rating, and a 98 relative strength rating. It's not USA based. Its headquarters is in London, MRX. So another thing that I want to talk about, getting back to the balance of power, and remember, price is primary, volume is secondary with moving averages. Everything else you see besides, I'd say relative strength is also secondary. So moving averages, volume, relative strength is secondary. But all these other indicators that you're going to see on my charts, they're all tertiary. They're just added benefits, added bonuses, extra variables in a long equation of how much size I want to take in a new long stock. I also want you to notice that there's zero red bop in this chart whatsoever. The relative strength line goes from the lower left to the upper right, and it clearly, based on the relative strength line, looks like the market has never pulled back in this stock, right? I also want you to notice on an end-of-day basis, we're already long this stock technically. It was a new long signal. I'll show you what the chart looked like. Let's go here. On this day, it was a new long signal. Why? The previous day volume surge, max green bop. The next day, the above average volume made it show up in my scans. That made it a new long position. I wonder now if I would have found it because it wasn't a pocket pivot point signal. I was scanning all my scans. I'm only doing pocket pivot point signal stocks right now, guys. So I don't know if it would have shown up. But that's when the long signal was. I'm long, and it worked out well. However, once the market got rocky in February, I'll show you guys what I did. So my final stop went to the 50 SMA. When it cracks the 50 SMA, I'm all out. Now, why wasn't it 100% end-of-day sell signal? This is the first 50 SMA crack since the new long signal back here. So that's only a 50% end-of-day sell signal. Final stop would be below this low, and another close on heavier volume, especially if it lost green bop, it would have been a 100% end-of-day sell signal. That didn't happen, and the stock held up the entire time. And today, balance of power at the bottom of the chart spikes to max green. Volume truncation, heavier above average volume, volume truncation with a pocket pivot point signal, which is why it showed on my radar. And it's right at the 21 EMA and a little bit above the 50 SMA. So it's not extended. It's within the consolidation. It's not extended. Volume truncation, max green bop, 99 composite, 99 earnings per share, 98 relative strength, and it's a European stock. I love it. So, with that being said, this is a new long position. I'm not risking just 1R on the trade. I'm pushing it up to 2R. And that might seem really bold, but it's a liquid stock. I'm not going to have any problem getting in and getting out. I'm not going to have much slippage. My biggest risk is it triggers and fills, and some bad news comes out and it gaps down. Am I willing to take that loss in this market? With this name, yeah, because it's European. If this wasn't a London-based stock, maybe not. But I understand the catalyst, money capital flowing into Europe, Europe increasing their spending on defense because the United States is not backing them in Ukraine anymore. It all makes sense to me. So I'm going to attempt to get long above the high of the day. My limit order, my buy stop order at Interactive Brokers across all accounts will be 38.69, and I'm willing to have a limit offset up to 39.10. If it gaps and goes above 39.10, so be it. It is what it is. I'm 1,000% sure another name will come along. But just to let you guys know, by risking 2R on this trade to my final stop, which for me will be the dynamic, which means it changes every day because if the stock moves higher, the 50 SMA is going to move higher. If the stock goes flat, the 50 SMA is still going to move higher because it's taking into account the last 50 days of trading price action. I'm going to risk 2R on my total account capital from the entry to the dynamic 50 SMA. You can also use the recent low, 35.52. You could also use this recent lowest low within the most recent consolidation at 33, or if you want to use the entire base of the consolidation, you can calculate your size and risk to 30/40. I'm going to use the 50 SMA because I want to really juice up my size in case this one works. But MRX is the first quality long signal in a very long time, and I'm willing to take size in it. So now this takes me to my squeeze scans. Let me get the intraday names here from today's session out of the way. I actually have one stock in my daily squeeze scan, NAK, and I like it. It's a material stock. It's consolidating. I would love to see this pull back, get to the 21. If there's no crazy price bars, it's actionable off the 21. And or it's actionable on a breakout above this high. It's in my daily squeeze scan because we finally entered a squeeze. And on the weekly time frame, these three indicators are green. So only one stock currently qualifies. Now, what I'm more interested in is my weekly squeeze scan. So in my weekly squeeze scan, which by the way, there's a bunch of criteria that it has to make before it can even get into a stock being in the weekly squeeze scan. CXW is there, AGX, there's TATT, and it entered it here. This is when TATT entered this scan. USM is back in it, GEO is back in it, APEI, UTI. This is a Chinese name. Let's forget about that. LNTH. I really like the way this looks. VIRT, and of course, WGS is back. But this is a lot of stocks. This is the most since the downtrend started in February. And if you look at WGS, it looks good. CXW, good. AGX, good. TATT, great. USM, good. GEO, good. APEI, a little wonky for me, not too much into it. UTI, a little wonky for me, not too much into it. LNTH on a daily, nowhere near being set up, but still on watch because of the weekly chart. VRT, sloppy, but still strong, strong, strong. And then WGS. So there's quite a few names out there that look good. The news flow is very bearish. All of my friends are now talking about how bad the market is. These are all signs to me that we want to move higher. Now, out of personal interest, I'm going to look at MRX on this. I'm triple green here on a daily. I'm in a loose squeeze. We'll see if it can fire from it, but I look good here on a daily. And as you can see, it's right at the 21 EMA. You could even use the 21 EMA or today's low day as your final stop. And the volatility stop is below it. So MRX is really lined up. We'll see if it works. If not, you know my long-term game plan. You know what I'm going to do if the market rolls over on the swing position size. And if we break out and continue to run higher, you know that what names I'm stalking. Spot, PLTR, Uber, Dash, the big boys. Netflix was the other one. And we'll see what happens. Open-minded to any and all outcomes, prepared for everything, game plan for everything. Have a great rest of your Easter weekend, everyone. Aloha.